Alright, so if you want trading ideas, you can go to Option Alpha, Trading Ideas, and you can just kind of copy their trades or actually just link your trading um, exchange or broker to this, and you can just use their trading ideas. So for DTE, I would put like less than 5 because I'm getting our trades quick. I would look for something with high alpha, high EV. So the max profit is 692 in 2 days, and the max loss is 308. The risk and reward is there. That's pretty good for Iron Condor. So you would look for alpha and EV. EV is the payout. If you understand. And the earnings in 3 days, so this is a pretty good trade for this one. DE. But we can learn what it is. I have it here.
In probability theory, the expected value of a random variable is a measure of the long-term average outcome that can be expected from an experiment or a random process. It is calculated by taking the weighted average of all possible outcomes, where the weights are determined by the probabilities of those outcomes occurring. Mathematically, the expected value of a discrete random variable x is given by E equals, where E is the expected value of the random variable x. X represents each possible outcome of x. P is the probability of x taking the value x. Let's take an example with a roulette wheel at a casino. A roulette wheel has 38 pockets, numbered from 1 to 36, and 2 green pockets numbered 0 and 00. When a player bets on a specific number and the ball lands on that number, the player wins 35 times the amount of their bet, plus their original bet. Suppose a player bets $1 on a single number, say 17. There are 38 possible outcomes, and only one favorable outcome, so the probability of winning is 1/38. If the player wins, they receive $35 in addition to their original $1 bet, resulting in a total payout of $36. Now, let's calculate the expected value for this bet. E equals payout if win, plus payout if lose. E equals plus E-$0.0526. The calculated expected value is approximately $0.0526. This means that, on average, for every $1 bet the player makes on this particular number, they can expect to lose about 5.26 cents in the long run. This negative expected value indicates that the casino has an edge over the player in this particular bet, which is how casinos ensure their profitability. It's important to note that the expected value is a long-term average and doesn't predict the outcome of any individual bet. Players can experience both wins. In options trading, alpha refers to a measure of the potential additional return that an investment or trading strategy may generate, over and above a benchmark's expected return, given its level of risk. It is often used as an indicator of how skilled a trader or investment manager is at generating returns that are not solely a result of the market's overall movements. Alpha is a component of the capital asset pricing model, which is a widely used framework in finance to assess the expected return of an asset or portfolio based on its risk relative to the overall market. In the context of options, alpha specifically measures the excess return generated by an options trading strategy beyond what would be expected based on the market's performance alone. Positive alpha indicates that the strategy or investment is outperforming the market or benchmark, considering the level of risk taken. Negative alpha suggests that the strategy is underperforming. It's important to note that alpha is a concept that applies to various types of investments and trading strategies, including options. When discussing options trading, the alpha associated with a particular option or options strategy reflects the potential additional returns that could be gained through skillful selection, timing, and execution of options trades. In options trading, An investor or trader might analyze the alpha of an options strategy to assess whether it's providing additional value beyond what would be expected from simply holding the underlying asset or a benchmark index. However, options trading involves complex strategies and various factors that can influence returns, so alpha is just one of many considerations when evaluating options trades.